Hey everyone, Brian Hoops here, Midwest Market Solutions. This is our Market Insider Supply and Demand webinar. It is Friday. It's May the 10th, and boy, we've got so much to talk about here. Want to get right to it and visit with you. So let's take a look at what's going on, and we're going to look at the numbers from the USDA as they reported them today. We are also going to kind of do a what if scenario as far as yields and ending stocks go, planted acres, that sort of thing. We'll go through the numbers here, but I do want to mention our office here has several locations around the Midwest, and of course, there's always a risk of loss in trading futures and options. And what we're trying to give you here is no guarantee that will result in any profitable trades or hedging ideas, but these are our best thoughts and ideas based on what we know, including my personal 20 plus years of experience in these markets. So we're full service brokerage. If you're joining us here, you're not a client of ours. We do offer full and discount brokerage services. We have offices all over the Midwest, home office in Springfield, Missouri, two offices in Iowa, Storm Lake and Pocahontas, Yankton, South Dakota is probably our largest office with 4 brokers there. Omaha, Nebraska, Thief River Falls, and Roseau, Minnesota, as well as offices in Verona, North Dakota, Enos, Montana, and Watseka, Illinois. Now, we clear our trades through R.J. O'Brien, which is the oldest clearing firm of the CME, and started in 1914. So a lot of experience with all of our office combined. We do personalized marketing programs. We have a special hedge newsletter and text service for clients. And if you're a little disappointed with your marketing, we maybe can help you out with that. We are 100% sold of our grains for old crop. Minimal sales on the books for new crop, anywhere from 10 to 25% of corn, beans, and wheat of the new crop sales. But those sales, wish we had more at the price levels we do, but certainly going to have some challenges in 2019 to get back to profitability for a lot of producers after this free fall in prices. Corn, soybeans, wheat, livestock trade has been very volatile and at some multi-month lows as well. So a lot of volatility, and there's ways to kind of minimize that volatility, minimize that risk, give yourself some price insurance, and any of our offices would be glad to help you. We do have, like I said, full and discount brokerage services. Our trading platform is available, as well as market quotes, our hedge program, as well as our daily newsletters, our Market Insider TV series, and also subscribe to us on Twitter and our text marketing service. Let's look here at the numbers from today's report. All right, starting off with the top, we're looking at U.S. supply and demand, ending stocks numbers here. Corn at 2.095, and we're going to go through some of the numbers a little bit more depth for corn. So I'm just going to gloss through the highlights here. 2.95 billion bushels, that's up 60 from last month. It is down from a year ago level, but was the average trade guess. Soybean stocks, old crop stocks at 995. I don't think we're done yet as far as increasing these stocks. They're up 100 million from last month, and we're probably going to get over a billion in subsequent months. And wheat stocks at 1.127. So none of these numbers are bullish. All are bearish compared to year ago levels, compared to the average trade guess, compared to last month. And then you look at new crop stocks. 2.485 is a standout number for corn. I think that's probably the highest one we'll see for this year. You never know how our yields are going to be, but it sure feels to me like this is one of the biggest numbers we're going to see of this year. 2.485, we'll talk about how we got there and what we're going to do with this ending stocks. Soybeans at 970, we're going to grow that most likely, and wheat stocks at 1.141. You can see all these numbers compared to old crop, new crop. There's not much change except for corn. Corn's almost 400 million bushels larger, and as I said, probably that's the high water mark for corn, and we'll probably lower that somewhat going forward here in subsequent reports. But bottom line on these numbers, there's nothing bullish here on these numbers alone. The world is awash in stocks. The U.S. is awash in too much supply, and that's going to keep rallies in check and pressure against our markets. Wheat crop production estimates here. This is our first look at U.S. wheat production. All wheat came in at 1.897 billion bushels, slightly below the average trade guess. It is a little bit above year-ago levels. Now let's break it down class by class. Notice there is no spring wheat at this point in time. It's a little too early. Spring wheat's just being seeded, and we'll get a number next month from the USDA. But all winter wheat at 1.268 billion bushels. That is up from last year, slightly below the trade guess. And class by class is where it gets interesting. Hard wheat, that's Kansas City, 780 is our production number. That's a big number. Compare it to last year at 662. And if you look at the soft redwooder, this is the Chicago at 265, down from last year and also below the trade guess. I think from a speculative standpoint, soft red continues to gain against the hard red. We've got to ration some of these stocks. This isn't, dire straits as far as our stocks. We don't have to have a huge bull market in Chicago, but compared to Kansas City, I think there's some opportunities in the spread market, and I think the spread market is how wheat will diversify itself, the class by class, in the spreads. And we want to make Kansas City a little bit more exportable on a worldwide basis, and that market I think is going to struggle, and Chicago could find some strength against it, but boy, we're either at contract lows, hitting contract lows, or just sitting above it, depending on which month you look at. As far as our world numbers go, here's some more bearish news, as if we needed any more bearish news. Corn production numbers for Brazil at 100 million tons. Last month we were at 96, so we jumped 4 million metric tons. Look at last year, a year ago, at 82 million metric tons. Remember, they had a drought last year, and our U.S. export profile really jumped because we were able to take advantage of that. This year, it's the complete opposite. They're having a huge crop, 100 million metric tons, above the average trade guess and well above the range of guesses even. And Argentina, same thing, 32 million metric tons. Now we're producing 49. They've got a supply of corn down there that's going to eat into our exports, which is why we were sold out of our old crop stocks as far as recommendations go. We sold out back in January, because we could see that there was a crop coming and our demand would not be there that we would need to make this meet the carry in the market. So Argentina's soybeans and Brazil's soybeans, not much change here. A little bit of an uptick compared to last month in Argentina, unchanged in Brazil. Now, we were down from last year because Brazil did grow a big crop, but we are much larger down south in Argentina as far as soybeans go. As far as our world stocks, this is old crop corn. Compared to last year, we're down, but look at the size is growing compared to last month, up to 326 million tons. Soybeans much larger than last month, and wheat about the same. And as far as our world stocks, we're looking at 315 million metric tons, down a little bit from last year, but nothing to be concerned about that we need to ration or anything like that. We've got big supplies of world stocks here, 315 million metric tons. Soybeans at 113 million metric tons, and wheat at 293, way more than last year, way more than what we need. So let me flip screens here a little bit, and let's talk about this as far as, I'm going to make these numbers a little bit bigger here. So hopefully that'll enable you to see these a little bit better. This is corn supply and demand balance sheets, and what we have today in this column here, May 10th column, is what we receive from the USDA as far as our new crop balance sheets. I'm going to play with this last column where it says projected. I'm going to mess with this a little bit and give you an idea of what we think potentially is going to happen to our ending stocks, because today the USDA said 2.485, 2.486 billion bushels of carryover. Wow, that's a huge number. And you look at the exports at 2.275. Compared to going back to 2012 marketing year, this would still be one of the larger export profiles in the last 3 or 4 years, even though we have big competing supplies on a worldwide basis. Our feed usage is forecast at record or near record levels, and our ethanol numbers, our residuals here at 6.950. This category here is industrial ethanol seed all combined into one, 6.950. Those are some pretty hefty numbers when you look back at history. And we've got good demand base. Total usage at 14.6 billion bushels. That's a very strong demand base. And you can go back here, at least 2012, and if you go farther back, you're not going to find anything that's better than what we're seeing this year. 1 year, maybe 2 years, we're very close to 16, 17, 17, 18. We had a little bit better demand. But as far as our demand goes, it's not bad. And the USDA is pretty much either spot on or maybe a little bit optimistic. The problem here is not only our carry-in numbers, but also our production. If we're accurate at the 92.8 million acres, we're going to harvest about 85 and a half, and what they're using for yield is 176. And I mentioned this morning, I did a segment for TD Ameritrade Network where we talked about the upcoming report. I did that 7:15 this morning from my office. The USDA, since going all the way back here to 2013-14, they have not adjusted the yield in the May supply and demand reports. We didn't expect that they would. It's a little too early. They're going to wait until the June report to maybe make some adjustments, and they may make some minor adjustments. They could start lowering yield, maybe 4 to 5%. But the big number I think that could change things is this planted acreage number. I do think there'll be quite a bit of prevent plant around the Midwest, and especially in parts of the Dakotas and in Nebraska. There's not much planting in the eastern belt as well. I don't want to say I'm thinking there's going to be a huge acreage amount of prevent plant, but there certainly is going to be some. And I do think as we go into this year, there's not much of an economic incentive to shift from corn acres over to soybeans because the price of soybeans have plummeted. So we're either going to plant corn or we're not going to plant anything at all. Let's use an arbitrary number of 3 million acres. And so that would be 89.8 million. We're going to lose 3 million acres and keep the same yield, figuring that maybe some of those acres that aren't going to get planted are going to be not as good of production type acres. And that changes our balance sheet quite a bit. We'll leave our exports and everything the same, but that takes 486 million bushels out of our ending stocks. And so you're still looking at 2 billion bushel carryout, which is a burdensome number, but not as burdensome as 2.486. And then if you can adjust the yield slightly, maybe drop the 176 down to 174, something like that. You drop that ending stocks number a little bit farther. So I think there is some adjustments that can be made here. And if you would shave 5 bushels off of that 176, or 5%, I'm sorry, 5% of the yield off of everything, 176 yield minus 8.8 bushels per acre, that drops your yield down to 167, which we haven't had that bad of a yield since about 2015. We had a 168.4, but if you drop the yield, your ending stocks does shrink to 1.256. So I think this will be in the back of the mind. We've got to give something to the trade, to these funds who are holding some massive short positions, a reason to cover their shorts. Right now, we don't have any reason. If we get into June and we get a really hot stretch of weather, which is not in any forecast that I've seen at this point, so it would really catch the trade off guard, that would send prices higher and give you some selling opportunities. But yeah, we're going to have a combination of yield loss and acreage loss, in my opinion, this year to see much in the way of changes for this balance sheet. And if we look at the soybeans, and let me make this screen a little bit larger as well. Okay, so this is the May 10th. This is the numbers USDA gave us here. And one thing I did want to point out is they have this year, this is the old crop right here, 18 and 19, at 1.775 billion bushels of exports. This would be one of our worst export numbers going back to 13 and 14. And this may be optimistic. We don't have an agreement with China right now, which doesn't mean that they won't buy soybeans, but I think there's a couple different ways China can go with this. They can either just try and buy from South America and pay the tariffs to the United States and just live with the consequences of that and hope that President Trump does not get reelected in 2 years and that they can influence the new president into a new trade agreement where they won't have those many tariffs. Otherwise, they're going to have to reach some sort of agreement that would boost these exports up into this range. But without an agreement with China, I don't see us exporting 1.95 billion bushels of soybeans this next year. But if the USDA didn't say that today, we'd be looking at a much larger export profile here than the 970 million bushels. So we make a few adjustments on the soybean balance sheets. There's really not that much to make here going forward. So looking at these numbers, change this to 970. Okay, so there we got our numbers to balance up here. We've got carry-in at 970 million bushels, production at 4.150. It's down a little bit, and I really don't feel like we need to adjust the planted acres much, because I don't think there will be that much corn acres shifted to soybeans just because of the price level. I think prevent plant may be a better option. I've heard a lot of clients in the Dakotas talk about shifting to oats. I think the planting date is about June 15th, similar to soybeans maybe. And someone can correct me if you want to, but I'm thinking there's better pricing levels for oats than to try and plant soybeans at this date. You get probably better returns given the yield prospects and the price level that we're at. So I don't know that we can change too much in the way of acres in here. I think we're just going to be stuck with ending stocks at 945, 970 million bushels, something large compared to what we have been seeing back in these years of 12, 13, 14, 17, all these years we just started to build up our ending stocks, and I just don't think there's much in the way of things that we're able to change that is going to make much of a difference. So most of the changes I think will be in the corn market. Hopefully we get some sort of a weather event this summer to give us some opportunities. If we do, I really would recommend have orders sitting there waiting at your elevators to make sales. Don't sell against the cash market, sell against the futures. And you can do that through your brokerage office as well as going through your elevator. So just want to say thank you for your attention and participation in today's meeting. Let us know how we can help you in the future. Hope this webinar helps you out, and hang in there. I think things will get better. Hopefully we'll get at least a 2-week stretch of hot weather in June and July that'll rally these prices off these lows. Have a great weekend, everyone, and hope you had a great day.